Hello, I'm Simon Hobbs. You know, if you're running your own small business, the IRS gives you what is probably the best tax deal in America. Because essentially you move from being a W-2 employee with very few deductions to generating business income from which you can deduct business expenses. It is entirely possible, particularly if you're starting your business, that yes, you earn less than you did before you took on the business, but you actually take home more in cash terms because of the deductions. Even a side gig like this can help. But it's really important that you get proactive in that process. You know, your tax preparer, most tax preparers, let's put it that way, most tax preparers are on deadline. They're way too busy to tax maximize your individual situation. You've got to turn the tables. You've got to go into them and say, I have these tax strategies, can we use them, will you sign off on them? And I would help you with that. Me and my team generate personalized tax plans for people, and it's a team sport. The more you help us, the more you tell us about the business, the better that individualized tax plan is ultimately going to be. Now, I'm not suggesting to any extent that information or anything I say on this video is a substitute for individualized, personalized advice from a qualified tax preparer. Everything that you do has got ultimately to be run through them. But as we're here, let's go through a quick checklist. Is your tax preparer writing off 20% of your profits through the qualified business deduction for which you're probably eligible? If you're paying for your own health insurance, that should be tax deductible. That's also vision, long-term care, and dental. Not just for you, but for your spouse and for any children that are under 26. Don't be afraid of the IRS. If you are genuinely using part of your home as an office and you've got the documentation, then claim for using part of that home. Claim for the upkeep of that part of the home. That's phones, that's power, that's maintenance, potentially, of course, that's also rent. There is a situation that you can construct, although it's not easy, whereby the business rents out your home for conferences and generates a tax deduction. And hopefully you don't end up personally taking the rental income onto your side. When it comes to travel, there are two ways that you can claim business use of your vehicle. It's also possible, again though there are strict rules, to buy an SUV and to claim the entire cost of that SUV within a given tax year. But don't go out and buy an SUV because I said that. Go and talk to your qualified tax preparer. You know, the cost of funding your business is also something, or financing your business is also something you can claim. That would be interest, and that would also be fees and charges, and that could be on your credit card as well. Do you know that you can employ your children under 18 in your business? Welcome to America, yes. $13,000 per year, potentially for them, tax-free for them to save, and you take the $13,000 tax deduction. And then there's the real nitty-gritty stuff. You know, if the business owns real estate or it owns equipment, then you can claim write-offs each year through what they call depreciation. But probably the biggest write-off that you'll be able to generate is if you're kind to yourself, if you actually try and improve your own financial future by saving more for your retirement. You know, we would work with you to come up with suitable retirement plans, maybe a 401k for yourself, a solo 401k as it's called, or maybe an IRA. You know, a traditional IRA, where you put in the contributions and basically those are tax claimable within the year that you do. You invest the money, it grows year after year after year tax-free, and then you pay tax as income when you take it out in retirement, at whatever the prevailing tax rates are at that time. Now, I should point out, of course, that if you take the money out before you're 59 and a half, you will pay a 10% IRS penalty in addition to the tax, the income tax that you'll be paying anyway. These sorts of conversations are what we do all the time with our clients at California Financial Partners at no additional charge. This is what we call a holistic approach to looking after everybody, in addition, obviously, to managing their investments. Don't you think it's time you reached out to us to see how we could help you?